What is an FHA home loan? By the end of this video, you're going to have a great understanding of what an FHA home loan is and why you might want one. Welcome back. My name is Gavin Sessions with Loans Made Simple. If you're curious to learn about all things related to mortgage and home loan financing, subscribe to our channel. We post new content each week. If you're ready to get qualified for a home loan or just looking to get connected to a great real estate agent, check out the description below for our contact information or leave us a comment. We'll be down there getting answers to your questions ASAP. So as I mentioned, this video will provide you an educational overview of FHA home loans and why you might want them. And we're going to do that by discussing 4 key topics. The first is a brief definition of what an FHA home loan is. The second will describe some key features and eligibility criteria. Next, we'll discuss the loan limits for FHA loans and do a brief comparison to conventional home loans. And last, we'll cover some pros and cons. So what exactly is an FHA home loan? Well, I'm glad you asked. It's a loan that is insured by the Federal Housing Administration and backed by the government. That makes it more accessible to a broader range of borrowers versus a conventional loan. Next, let's jump in and explore a few of the key features and the eligibility criteria. First, FHA loans allow for lower credit scores, sometimes as low as 580. At least that's what the guidelines state. That being said, I always want to caution people. If your score is under 600 or even better yet, under 620, it's very unlikely that you're going to be able to get qualified for a mortgage. Not impossible, but unlikely. So this is typically where I'd want to pause and say, hey, if your score is in that situation, call it 500s to low 6s. We'd love to get you connected to a credit repair expert. Those folks are awesome at helping create a baseline plan for you to improve your credit scores and your credit report, which will help you significantly when it comes to qualifying for a mortgage. Next, one of the best features of an FHA home loan is the minimum down payment requirement, which is only 3.5%. Now, the cool thing about FHA loans is if you are limited to a 3.5% down payment, you're much more likely to get approved for an FHA versus a conventional loan. And that's very simply because FHA loans are designed for borrowers with minimum down payments. We won't get into this too deeply right now, but if your down payment is between 3 and 3.5%, it's far more likely for you to be approved for an FHA loan than for a conventional loan, depending, of course, on a few other factors. Now, when I say 30-year fixed, I'm forced to just pause because the 30-year fixed mortgage is really, truly amazing. It's likely the #1 wealth generator for American families. And if you think about what a 30-year fixed rate mortgage is, it provides you the opportunity to lock your interest rate for the life of your loan for 30 years and ensure that your housing expense never increases for as long as you hold that loan. What's crazy is that your income most likely will increase as years go by, which means that your housing expense as a percentage of your income will likely decrease as years go by. It's truly an incredible hedge and a game changer for American families. Next thing we want to talk about briefly is the debt to income ratio. And it's really a benefit of the FHA home loan because FHAs allow for higher debt to income ratios, sometimes as high as 50% or maybe even slightly more. So debt to income ratio is often referred to as the DTI, and that is your monthly gross income that is put towards your monthly minimum payments that show up on your credit report. And that gives us a percentage. So ideally, we want to have a debt to income ratio, a DTI of about 50% or less. And that would include your prospective mortgage, which also includes your property taxes, your homeowner's insurance, your HOA dues, and your mortgage insurance. The important thing to note about your DTI is it has a direct impact on your purchasing power, meaning the higher your DTI, the less you can borrow. The lower your debt to income ratio, the higher the loan amount you can have. And therefore, that would correlate to a higher purchase price on a house. Last but not least, we really can't talk about FHA home loans without talking about mortgage insurance. And if FHA had a black eye at all, this would be it. Now, that being said, FHA made some awesome improvements recently to reduce the rate on mortgage insurance, which actually makes them far more competitive with conventional. And for folks that have lower down payments, call it the 3 to 3.5% range, FHA, even with great credit, might actually be a better option for you than conventional. So we'll obviously explore all options for your specific scenario, but by and large, FHA is a really good place to start. Specifically on mortgage insurance, it comes in 2 parts for FHA home loans. So number 1 is an upfront mortgage insurance premium, and that is 1.75% of your loan amount. Thankfully, that amount can be financed into your first mortgage, meaning you don't need to bring that 1.75% to the closing table. It just gets to be part of your loan amount, which then becomes part of your monthly payment for as long as you keep your mortgage. The second part of mortgage insurance is your monthly mortgage insurance. Now, I just mentioned FHA recently reduced their monthly mortgage insurance rates to be far more competitive with conventional loans. Now, however, the key difference there is FHA monthly mortgage insurance is required to be in place for the life of your loan, unless there's one exception. If you bring a 10% down payment and for some reason FHA still makes sense for you, that mortgage insurance on a monthly basis will fall off after 11 years. Hopefully that makes sense. Wrapping up this section, there are a few exceptions, but by and large, mortgage insurance is going to be part of your monthly payment for any home loan product if you have less than a 20% down payment. Just want to pause the video for a quick moment and invite you to connect with us. If you're ready to take the next step to get qualified and speak to a mortgage professional, a loan officer, or if you'd like to get connected to a great real estate agent, click the links below. All right, let's move on to our next section where we're going to talk about loan limits and do a brief comparison to a conventional home loan. So moving on to loan limits, FHA loans are set by the government and they vary by location. So higher cost areas such as the coast, the West Coast or the East Coast, Seattle, San Francisco, LA, New York, and even Hawaii, those are considered higher cost areas and they have higher loan limits, whereas the lower cost areas of the country are going to have a lower FHA loan limit. As those loan limits tend to vary from year to year, we're going to avoid sharing what those loan limits are right here, but hit us with a comment. We'll be happy to get you the loan limit for any location that you're interested in. If you find yourself shopping for a higher priced home because FHA loan limits are typically less than the conventional loan limits, you may find that FHA may not be suitable to purchase the home that you're interested in. So to wrap up this section, we're going to just do a quick comparison between FHA and conventional home loans. So unlike FHA home loans, conventional home loans aren't backed by the government, but rather by Fannie Mae and Freddie Mac, and that makes them less accessible to borrowers with lower credit scores and lower down payments. Another thing to note is conventional home loans have tighter debt-to-income ratio limits, typically about 43%, rather than FHA, which is as high as 50%. And this can limit purchasing power for borrowers that might have more debt and or lower income. Next, as we've already touched on, conventional loans also have loan limits, but they're typically higher than FHA, and that can be helpful if your goal is to purchase a higher priced home. Last, similar to FHA, conventional home loans also have mortgage insurance, but only for loans with less than a 20% down payment. Conventional mortgage insurance does not last for the life of the loan, but rather will go away once you've paid down your balance to 80% of the original purchase price. Let's wrap up by reviewing a few of the pros and cons of FHA loans. So number one, they allow for lower down payments, but conventional loans do as well. That being said, you're more likely to get an approval with an FHA home loan if you have a minimum down payment of somewhere in the range of 3 to 3.5%. Now hear me clearly, minimum down payment for FHA is 3.5%, but again, more likely to get an approval with FHA when you have a minimum down payment. Another benefit worth noting is that FHA loans allow for lower credit scores. Like we said, as the guidelines allow for a score as low as 580, but if you hear anything from me today, hear clearly that we really want to see a credit score of around 620. That's where you're most likely to have a high likelihood of approval. Another benefit of FHA home loans is they are backed by the federal government, meaning that makes them more accessible to borrowers with lower credit scores, lower down payments, less favorable financials. One more pro worth noting about FHA loans is they allow for higher debt to income ratios, which means you can have a higher purchasing power. So with a debt to income ratio of around 50%, you're going to be able to borrow more money, which will then in turn allow you to buy more house. Let's briefly touch on a few of the cons of FHA loans, and I don't want to leave a bad taste in your mouth, but there are a few out there worth noting. So number one is mortgage insurance. Like we talked about, 1.75% upfront mortgage insurance premium that you can finance into your loan. So that's the good news. But the bad news is you're going to have mortgage insurance for the life of your loan if you have less than a 10% down payment. Now, that being said, we already mentioned this. It's worth saying again. Conventional loans with less than a 20% down payment also are going to have monthly mortgage insurance, so just keep that in mind. Mentioned this one already as well, but FHA loan limits are often lower than conventional loan limits, which means they can't be used for higher priced homes. Last but certainly not least, we have not talked about this at all yet, but FHA loans require that you occupy the home as your primary residence. Now, that doesn't mean you can't buy a multifamily home, but it means you must occupy at least one of the units of the multifamily home, which would be a 2, a 3, or a 4-unit property as your primary residence. So if you're interested in buying an investment property or a second home, FHA is not going to work for that scenario. So to quickly summarize, FHA is an amazing loan and a fantastic product, especially for first-time home buyers that are starting out that might have lower credit scores, that might have a minimum down payment, or maybe are just looking to get into a house and have FHA be their first loan. Great product for all those scenarios. One of the things that's been truly amazing over the years is be able to help a first-time home buyer that has a minimum down payment and maybe a lower credit score use an FHA loan to buy a primary residence, then pay that loan down over a few years, and at the same time, the home's value appreciates. Ideally, we get to a situation where the equity is at least 20%, meaning that their loan amount is only 80% or less of what the home's market value is. When that happens, we get the pleasure of helping them with a refinance. Ideally, we can move them to conventional and get rid of their mortgage insurance, as well as drop the interest rate, which has an incredible impact on their monthly payment. Super cool story, been able to do it several times, would love to help you with that. So if you're looking to get qualified for a home loan or looking to get connected to a great real estate agent, check the description below for our contact information. Leave us a comment. We'll get back to your comments ASAP. Looking forward to helping you.